Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Asian markets seem to have opened up on the positive footing as well.
Both at the headline index, I'd like to see actually broader market participation. Board has approved the issue of warrants to Blackstone.
It's still a little cautious. Nifty is down about 40 points at the open.
All dips should get bought into, and I think the markets are headed for new lifetime highs and beyond.
I think the bigger issue is more about how do you position yourself to benefit from this Gen AI spending cycle.
Our margins of current business are sustainable because of the cost measures and the positioning of the business that we are in.
We were already in the red, and right now we are closer to the day's low as well at the 25,828 mark.
Indian financial sector is seeing a massive foreign inflow of over 65,700 crores. Now, that's worth $7.5 billion, and this is in this year itself.
We hope to work towards a fair and equitable agreement in the near future.
We are down 125 points as we speak, broken that 25,800 mark. There was some recovery at around 12 p.m., but that has been sold into.
Well, that was the day so far. Disappointing considering the optimism with which we started yesterday's trade. The Nifty went to levels of 26,100. And from that level, we're down close to about 350 points for the day. The Nifty sensex lower by close to about 0.5%. The advanced decline ratio is negative, 1:2. And now even the weekly gains have been erased. So in the second half of the turn, we really took a turn for the worse.
Well, that's right. This uncertainty with regard to the trade front. And I think some on the street believe that we're going to be getting a trade deal sooner rather than later. But clearly, we're getting comments coming in from Mr. Piyush Goyal. And he's saying that, that it could take some more time. Yes, there is some work in progress, but don't expect us to rush into it. I think that's the sum and substance of it. And I think we started getting these sound bites an hour or so ago. And from then is when the market started, falling. I think this trade deal uncertainty is something that is weighing on the markets yet again.
It's a story that's played out in the past, right?
Yeah.
The market starts hoping and starts getting very, very excited every time there is some hint of a thaw, every time there's a tweet. And we had that when, the tweets started coming in, or the social media posts started coming in from the US president about that Diwali phone call, etc. But then it's very clear that this in-person meeting is not going to happen at this ASEAN summit. And I just want to read out the statement. We'll play out the bite as soon as, it's live with us. But this is what Commerce Minister Piyush Goyal has said. And he was speaking at the Berlin Global Dialogue. And I'm quoting verbatim. He's saying, we are talking to the US, but we don't do deals in a hurry. We don't do deals with deadlines or with a gun on our head. This is verbatim. That soundbite will come in the next couple of minutes, and we'll play that out to you. And it very clearly, lays out the India positioning, despite all the talk that we've had from, the White House, with the US president saying that he's had a conversation with Prime Minister Modi, that according to him, India will start dialing back Russian oil purchases to almost zero by the end of this year. There's no confirmation from the India side, and this latest statement from the Commerce Minister seems to suggest that, an immediate breakthrough, perhaps not right now. And the market's reacting to that. In any case, we've rallied so much. The market's up 5% in October. So this week, we have basically consolidated and given up a little bit of that gain. So some caution, because we're getting into the weekend, and the conversations are still, going on.
And conversations are going to happen with our counterparts, right? Donald Trump will begin his diplomatic Asia tour, where he will meet with the prime ministers of Malaysia, with Japan's new prime minister, with South Korea, and then end with meeting Xi Jinping. So we'll have to wait by what comes out of there. But it's consequential considering all the tariff tensions that's going around. The rest of the emerging market pack or the Asia-Pacific region heads are going to meet him. But at least on the India-US front, there hasn't been any headway so far. And markets appear to be a tad bit disappointing. But again, as Surbi said, we've had a pretty good run since the beginning of October. The Nifty has been rallying from levels of 24,600. So keep that in context as well. Let's tell you what Yeah.
No, I was just saying, so before we get to what's on the show, just very quickly, a glimpse of where the profit-taking is coming in. Let's just talk about the action right now, here and now. It's actually all-round profit-taking. It's a lot of bank stocks that are shaving off gains. It's a lot of consumer stocks where numbers are not hot. And we knew they won't be very hot for the second quarter. Case in point being HUL. Down about 3.5%. Then you have a lot of the larger banks. Nifty Bank is down about 0.7%. So your Axis Bank, etc. Kotak, in the run-up to the numbers on Saturday, is also down 1.5%. So the short point is that there is not too much of a counterbalance on the green side, barring some of the metal stocks, particularly players that are linked to the aluminum price surge, and we'll ask Nigel more about that in just a bit. Hindalco, for instance, is up about 4%. There's some financials because of all the deal flutter that's going around. Shriram Finance, for instance, is still holding up. ICICI Bank is still holding up. But largely, it's a very quiet session. Saving grace for the bulls is that Reliance is not falling, at least. It had started the day on a bit of a soft note, but right now it's at the flat line. So let's see. Of course, that stock is going to play a huge part in the way this week and this session closes out. Rima, so yeah, let's talk about
the next 1 hour then. So far, it's been a tepid day of trade, but an action final hour coming up on closing bell. The indices have paired early gains. The Nifty stumbled below 25,800. FMCG, PSU banks, the top laggards in today's trade. Financial pack is in the news amid a surge in foreign direct investment, amplifying India's investment appeal. A comprehensive roundup coming up in just a bit. Bucking the trend today are the metal stocks on the back of surging aluminium prices. An impact analysis coming up in closing bell. And as you can see on the screen, India's Commerce Minister Piyush Goyal, optimistic over an impending trade deal with the United States, says he hopes for a fair and equitable agreement, but is not in a rush. The FMCG pack is sulking in trade today. Brokerages mount bearish calls on the likes of Colgate and HUL. You can see the stocks decline 3-4% in today's trade. Detailed analysis in just a bit. But for now, let's get to trade and how you should position yourself in the last hour of trade. Mitesh Thakkar from Bonanza Portfolio is now joining in. Mitesh, what's the trade that you've taken and where are we headed?
Yeah. So on the Nifty, we were talking yesterday that we could see a pullback about 25,800. We've kind of broken below that, though the closing is still not there. But, intraday, at least that 25,800, 780 zone was violated. The gap which happened on the 20th of October, Monday, has been filled. But we're still, away from the short-term daily and 2-3 hour chart based moving averages. So I think, as I said, in case we remain below 25,800, this pullback or profit booking net decline could head towards 25,600, 25,550 zones. I think that should be it. To me, it doesn't appear that we might go below that. But yes, there's pullback still, because we are still in the process of coming out of overbought levels on the hourly to hourly chart. So I think that volatility, that profit booking will come in. Having said that, these are the counters: 25,600 to about 25,550 on the downside, and on the upside, 26,200, broadly give and take 30 points, I think remains the key level. On the stock side, I have one buy and one sell. That's a buy on Bharti Airtel. That's a stock which is doing well. So positive setup over here. The indicators are good. So Bharti Airtel is a buy with a stop just below levels of 2005 for targets of around 2070. And Adani Enterprise, I think that's the stock which is breaking below its, or just on the verge of breaking below its key support level. So I'll give it a conditional sell. If it breaks 2490, 2485 zone, take a shot with a stop at 2515 for targets of 2420.
Okay. All right, Mitesh, got it. Thank you very much for that. We'll come back to you for some more trading calls in a bit from now. But let's put the spotlight on really the sector of the day, you can say the week, the month maybe. And we're not talking only from a stock price movement perspective. It's the sector where all the deals are happening. And today's big announcement finally came in on Federal Bank. Blackstone is all set to acquire a 9.9% stake in Federal Bank. This is another mega investment in the Indian financial sector. And it follows a string of transactions. We've seen this play out with the RBL Bank, where Emirates NBD checked in. Yes Bank, where the Japanese giant Mitsui checked in. And of course, IDFC First Bank, which also got private equity fund infusion. Gaurav is joining in. Gaurav, Indian banks and financials suddenly becoming very hot with the global players.
Well, yes, when we look at Indian financial segment, it is becoming hot, and it is not just the deals, it is also coming up with a lot of capital. In fact, in this year itself, if you look at the major deals, at least in terms of the major deals, we have seen an inflow of more than $7.5 billion, which is almost around 65.7 thousand crores of inflow because of the deals which are happening. The latest one that we saw is the Federal Bank, where Blackstone is going to invest almost 6,200 crores for 10% stake. Now remember, this is going to be a huge deal, given that when we look at the capital ratios for Federal Bank, they're actually adequate. So it is really key thing to watch out on how they're going to use these funds. But apart from that, when we look at other financials, we have already seen big deals happening. In fact, we also saw some foreign entities being promoter entity for Indian banks in the likes of RBL Bank. When we look at the deal, Emirates NBD is going to acquire around 60% stake for a cost of 26,850 crores. Now, this marks as the largest deal ever happened in the Indian financial segment, and at the same time, they will also be tagged as promoter. When we talk about financials, NBFCs are not behind, because the same kind of deal happened in Sanman Capital as well, where we saw inflow of around 8,850 crores, and this was from Abu Dhabi's IHC. Now, this company will also be acquiring around 41% stake in the company, and they will be also marked as promoter. Now, when we look at the secondary market deal, we did not see financials falling behind in that case as well, because in terms of Yes Bank, we saw Sumitomo Mitsui Banking Corporation acquiring almost 24.2% stake via secondary deals, and the total investment of more than 16,300 crores. When we look at the deal, now they will be the largest shareholder, but they will not be tagged as promoter. But at the same time, when we look at strategic investments, we also saw IDFC Bank's deal happening today. Not today, in this year, my apologies. When we look at the IDFC Bank deal, Warburg Pincus, they invested almost 4,876 crores for 10% stake. And ADI, they also invested around 2,620 crores for 5.1% stake. So all in all, when we look at the deals happening, it is not just a change in hand. It is also that the preferential equity that is being issued, and we also saw promoter being changed, or rather being assigned as foreign institute. So definitely it is raining deals and capital in the financial segment. How it plays out or how it is going to play out for investors is a key thing to watch out for. But for now, it seems that financial sector as a whole is at a very spotlight for foreign investors as well as domestic investors.
Yeah, absolutely, Gaurav. Take that point. Indeed, it is in the spotlight and the money is flowing in. We caught up with some industry veterans and experts as well to understand where this sudden rush of capital and the sudden rush of foreign interest is coming in from. Here are views from Dinesh Khara, the former chairman of State Bank of India, as well as Prateek Shah of EY India.
The recent one, which is Federal Bank, Blackstone taking stake in Federal Bank to the extent of 10%. So I think Blackstone has been there in the country for quite some time. They were into the financial sector, into various other entities, and it was a good opportunity. And the reason why they are all picking up stake in the mid-sized bank is that first, the growth opportunity among the mid-sized bank is significantly higher. And also with the improved capital, their ability to undertake risk also goes up. And also, to my mind, there's an excellent opportunity into the SME space, which perhaps the mid-sized banks would like to really tap now, because earlier they were all focusing on the unsecured retail lending. But to my mind, the decent opportunity into SME will probably be very, very promising various area for the mid-sized banks.
For Indian banks, this inflow is not merely about balance sheet expansion. It is about access to long-term patient capital that can fund credit growth, really help with technology modernization for a lot of these institutions, bring product diversification, especially at a time when domestic mobilization, has been a challenge. And obviously, the various investors, depending on whether it is a private equity or strategic investors, especially the strategic investors like ENBD and SMBC for that matter, will bring in a very different take in terms of risk management, digital capabilities, product expertise.
Well, that's on the banking sector. But since the market weakness today partly can be attributed to the uncertainty surrounding the US-India trade deal, it will be pertinent to listen in to the big headline that came in from the Indian Commerce Minister, Piyush Goyal, where he said, "We don't do deals with deadlines or a gun to our head." Listen in.
We are talking to the United States, of course, but we don't do deals in a hurry, and we don't do deals with deadlines or with a gun on our.
Okay, so with these short-term uncertainties, markets today are consolidating and seeing a little bit of profit booking. Gurmeet Chadha of Complete Circles is now joining in. Gurmeet, just to circle back to banks and what Gaurav was telling us, so many deals happening. I mean, how have you analyzed it, and have you made any purchases in the banking stocks? And if yes, which one?
So Rima, if you see, it all started with RBI changing its stance last year with repo rate cuts. So it started with easing liquidity, lower interest rates. And I think in last couple of policy, it was more credit where, the risk rates were adjusted. And I think with these deals happening, I think there is an important pivot happening in terms of RBI, in terms of allowing foreign players to hold substantial stake. We saw that with Yes Bank. We've seen that with Samman Capital. We've seen that now with Federal and RBL. This augurs well for the industry because this brings in, cost of funds go down, access to global capital goes up, and a change in norms wherein you are allowed to do acquisition finance. You can increase now lending beyond 10,000 crores. So they announced almost 20 measures related to credit and regulatory easing. And so I think it's more a signal that more reforms are coming. And it's very important for a banking sector. These are good marquee names. And it brings the necessary growth capital. Earlier, they were restricting it to banks which were in trouble, like Dhanlakshmi, like we saw the restructuring which happened with Yes Bank earlier. I think now it's a signal in terms of they are more comfortable. I also see more trends in terms of the cap on corporate investor limit going from 10%. Maybe it will get increased selectively. Something will be done with voting rights. So these are broader banking reforms voting and very, very good. I'm a little surprised with the negative reaction today on Bank Nifty, but I think that's part of it. Probably got to do more with the trade deal news than anything else.
Okay, but particularly about Blackstone's investment of 6,200 crores in Federal Bank, what have you made of it?
Very positive. And I think Federal Bank is also showing great turnaround since leadership change. Last quarter was very good. NIMs improved, CASA improved, loan mix improved. So overall, the core operating performance was pretty solid. And this is growth capital. They are well capitalized. I think more the bank diversifies from Kerala to more geographies. There's some bit of a niggling issues with union, etc., because it's an old bank. Once they are able to get that and get the culture right, I think this bank definitely deserves a re-rating in our view. With a disclaimer, we hold it in our portfolio.
Gurmeet, all that glitters is what?
It's gold, Nigel, for now.
But for today, it's aluminium. Let me come across to you and ask you your view on the stocks. And the reason that we're focusing on all that glitters is aluminium today is because LME prices has breached the $2,850 per ton. And that's why stocks in focus today that we mentioned at the start of the trading session, a little before that, Hindalco, Nalco, as well as Vedanta. They are the direct plays on LME aluminium prices. The reasons for the kind of spike up that you've seen in LME aluminium, particularly overnight as well, is that the demand-supply gap, that's tightened a little bit. And there's a smelter in Iceland, just to cite an example, that's put off temporary supply, and that had a capacity of close to 100,000 tons. So because of that as well, the supply is getting a little bit tighter and demand seems to be quite strong. In addition to that, later this month, there is the expectation that the Fed will go ahead and cut rates. When the Fed cuts rates, it's good news for base metals, particularly aluminium as well. So that's why, in fact, we are seeing some kind of interest in that front. And inventory levels on aluminium have gone down. So point number one is LME aluminium prices have moved up. Point number two is overnight, Alcoa was up more than 10%. But the reason that Hindalco particularly would be in focus today is because the commentary that they came in and what kind of impact it will have on Novelis. Now, the Alcoa CEO said that the current prices and the Midwest premium fully covered the negative impact of the tariff hikes. Remember, the fear was that companies like Novelis as well, they import their raw material from countries like Canada. And if the tariffs are going to be so high, then they stand to lose out. And on a quarter-to-quarter basis, there will be some hit. But the Midwest premiums have moved up from around $500 per ton to $1,500 per ton. So that's what's offsetting some part of this negative impact. Though for Novelis, you need to keep in mind that in September, there was a fire of one of their units. So the operating leverage will not really kick in. There'll be some kind of production loss. However, Midwest prices moving up is a positive read-through for Novelis and in turn, Hindalco. Gurmeet, Well, what's your take? These stocks are doing well in today's trading session. Vedanta, obviously, there's always been that value unlocking possibility out there because of the demerger. Whether or not it happens, that we'll have to, see. But Vedanta has a high proportion of their SOTP that comes in from aluminium. Nalco is obviously a direct play, though there is alumina which has been struggling. And Hindalco, well, that seems to have looked up as well. Among the three, do you like anything?
So Nigel, we like Hindalco. Also, our broad view is that we are in a commodity cycle with what is happening to global supply chains. So there are two spaces which are highly cyclical, which look attractive tactically. One is obviously metals and non-ferrous more, and both precious metals. Second is refining capacity. With so much of disruption, sanctions getting, oil mix changing for different countries, I think the refining capacity has been very low. There's very little capex which has come up, so that seems to be a little more structural. Metals could be more cyclical, depending upon what's happened, news flows. So maybe part of your portfolio, 8 to 10%, you can do between commodities, non-ferrous and precious, as well as refiners. Also gives you a lot of valuation comfort. Some of the refiners are at below replacement cost. Let's say, for example, Chennai Petroleum is one third of the replacement cost. Some of these metal names are pretty cheap. So you can play maybe 8-10% portfolio, tactically here, but don't be too greedy once you make a quick return in a market like this. Have clear filters in place, both on the upside and on the lower side.
Okay. Gurmeet, hi. Good to have you on the show this afternoon. Allow me to go back to financials, because in an otherwise slightly dull market, just look at the stocks that are moving higher. Look at Saman Capital right now, 8%. There are lots of other names as well. Actually, let me just get to that list. There's Credit Access, which is 6.5% higher. All kinds of names. Canara HSBC Life Insurance, about 3.5%. No, actually 7%, 8% on this one as well. So all kinds of financials, lending, non-lending, really flying through the roof. Saman also, of course, has come through in its new avatar. Gurmeet, any interest in some of these names that I mentioned, and maybe a specific word on Saman? I think everyone's looking for financial ideas beyond the obvious, easy to understand banks. Everyone's looking at tier 2, tier 3, non-lending, insurance. So what would your advice be?
So I think, Subi, one was valuation comfort. Something like Saman was, I think, half a book value. And then obviously the big investment came in, the leadership change happened, the cleanup happened. But my sense is you'll see a couple of quarters more before you start really seeing good growth with controlled credit costs. So we have RBL and Federal Bank in our portfolio, largely again for valuation comfort and turnaround happening with marquee names coming in. We have some NBFCs as well, including, which is more a consumption uptick play, which is Poonawalla, Bajaj, Cholas of the world. I think the non-financials is where probably you'll see higher growth, the AMCs, the capital market plays, the depository sector. Once market activity picks up, once you see more traction coming in, I think even the brokers will join. So I think good time to probably look at some of the capital market plays. And there's been healthy correction in CDSL or CAMS or even unlisted space like NSE. So I think that's something we are looking more at. And we already have, as I said, some of these tier 2 banks to play this. We are quite overweight as far as financials are concerned.
Okay, so you have the names in the thick of the action already in the portfolio, RBL and Federal. That's an interesting one. All right, we'll let you go to enjoy the weekend. Gurmeet, on that note, thanks very much. And once again, season's greetings. We hope you had a splendid Diwali and best wishes for a fabulous new year ahead. So go enjoy the weekend. Well, with that, let's take a quick break. Come back on the other side. We'll have Tushar Pradhan joining in with some more market perspective. Welcome back. Well, it's that time of the show where we have Hormaz joining in with all the firecrackers, the action makers and whatnot, the movers and shakers of the day. Hormaz, otherwise the bulls are a little disappointed with things fizzling out, but I'm sure you've got some patakas on your list.
Indeed, and the bulls in these stocks would definitely not be disappointed for sure. And Utkarsh Small Finance Bank tops the list today. This is the biggest single day gain and volumes that the stock has had since October of 23. It is almost a 20% up move that you're seeing on the stock now. It's gained in 3 out of the 4 sessions this week. But look at the volumes on the stock today. 10 crore shares have been traded on the stock today, and that is in comparison to the 20-day average, which is just 31 lakh shares. Of course, there is a news trigger behind this move today. The 950 crore rights issue that the company had approved has opened for subscription today. So that is one of the reasons why the stock is up almost 20%. And despite this up move, the stock remains below its IPO price, which is 25 rupees. Now, the earnings reaction that is coming in is PTC India Financial Services. And this is also the biggest single day gain that the stock has seen since July of 24. The third straight day of gains today. Volumes are at a record high with close to 6 crore shares that have been traded on the stock today. The 20-day average is just around about 4.5 lakh shares. And because of this move, the stock has moved above all of its key moving averages, but has been an underperformer this year, still down around about 8% in 2025. Now, defense and defense ancillaries were moving around today. The Shipping Corporation is one such name. The 4th straight day of gains, so it's gained every day this week, is up 8% today, but more than the 4 days this week, the stock has gained in 9 out of the last 11 trading sessions. And here too, we have had almost 5.5 crore shares that have been traded. The 20-day average here is only 50 lakhs, so 10x of its 20-day average. This is turning out to be the best month that the stock has had in 2025 and has been delivering positive annual returns right from 2018. And lastly, a weekly mover. The stock hasn't done much today, but on a weekly basis, DCB Bank has been in the spotlight all through and through. It's up for the 4th straight day today. This is up 24% this week, and this is turning out to be the best week that the stock has had since May of 2009. And over 10 crore shares have been traded this week itself. And even in today's session, even if the stock has not done much, we have had more than 1 crore shares being traded. The 20-day average is close to 40 lakh shares. It's above all of its key moving averages, and 22 analysts have coverage on this stock, and all 22 of them have a buy recommendation on DCB Bank.
Incredible, the kind of data you pull out every day, Hormaz. Thank you very much for that. Some other movers, JN Resources, we've been talking about it every day, but 7% up for the week, 16.5%. This month, it's up 70%. That's the whole duration of the company's life on Dalal Street so far. SBFC Finance, lots of NBFCs on fire. EPAC Prefab came out with numbers yesterday, was up 15, I think it didn't end with 15%, but at one point of time was up 15%. It's followed it up with another similar gain. Bulgaria Industries has been a big mover. And Industars, remember the Supreme Court verdict on Vodafone Idea is on Monday. Fortunes of Industar too are linked to it.
Well, that's right. And just pull up one more stock, SpiceJet. There's a massive volume spike out there. A big underperformer. But someone's booked their ticket. It has to be a bull. Stock is up close to around 15% as we speak. Big volume burst out there. But there is some pessimism with regard to this trade deal. However, Gokuldas Exports, those investors believe there's something in the offing. That stock continues to go from strength to strength. After yesterday's run, it's up another 3.5%, and it's holding on to those gains as well. So, that should come up for you. And finally, even Idea Forge, get the stock up for you. That as well spiking up in the last few minutes. Tushar Pradhan, though, Director of Hexagon Partners, joins us on the show. Hi, Tushar. Good afternoon. Good to see you in, and season's greetings to you, your family, as well as your team. How are you feeling about the Indian markets, Tushar? Getting into that midweek holiday, the bulls were thumping the chest, and they were like, all-time highs are here. Now, that trade deal is not a done deal, and various pockets of the economy appear a little bit softish. So the other, the bullish view is things are actually on the mend. How would you approach the Indian markets?
I think that's the consensus which is building up. And thank you very much for your wishes. The same to you, your families as well. What we are looking at is that we've had a very soft year from a market valuation perspective, in the sense that market not having gone anywhere, your earnings coming in at a relatively mild pace. It is actually coming back to fair value. And you have to remember that there's a shift happening globally where there appears to be an attraction for emerging markets. So if you've seen X of India, all the other emerging markets have posted upwards of 20% returns on an average. So the emerging market index is up almost 25% YTD. Now that does tell you that there is foreign interest in emerging markets. It hasn't trickled down to India, and that is partly because of the valuations that we had at the start of the year. I think with some adjustment in terms of what the valuation is and what the prospective year looks like, because the earnings season now is just getting started, and I think the next 2 quarters are going to be pretty significantly positive. If you put all of those two things together, I think there is reason to believe that the Indian markets can have a bit of a run because of the kind of earnings growth that we're expecting and the return of international investors back into Indian equities.
Tushar, when you speak to investors, are you sensing some sort of frustration, the fact that India is still not able to stitch a deal? You spoke about the outperformance, the interest of investors in other emerging markets. They've all outperformed. And it's been a long time, but we still haven't managed a deal. I mean, are you getting some sort of, are you sensing some sort of frustration that, on India, that India should have done something?
No, I think that is, I think something which most of the international observers, especially investors, have kind of taken in their stride, knowing that India has a lot of initiatives, it has a lot of priorities. So it is not a very bilateral thing to just enter into a trade deal, because we have to take care of so many issues which are so critical for our economy, and not only for this year, but going forward in the next 3, 4, 5 years. So I think everybody understands that the trade deal has to be discussed. It cannot be, pretty unilateral in a sense that let's go and do a deal, because there are so many things behind the scenes which have to actually put together before, any sort of contours to such a deal can happen. And I think most investors understand that. They may be frustrated by the number of months it has taken, because we were talking about this right at the start of the year. And it was very likely that India would have been the first among countries to have signed a deal. Maybe it is because of that expectation that the disappointment has been there. But I think now people are getting a better sense in terms of where we stand. And I think India's prospective chances of having a deal now much better than where they were at the middle of the year, because the geopolitics having been a little bit more on the milder side, I think there have been positive statements from each side coming through. I think there is a lot of positive expectation again building up, that not only in the speed in which the deal will happen, but it might be a bit of a win-win. I think the people have understood that this cannot be instantly done. They understand that even if there is a change in our view, it will happen over a period of time. And I think that is the biggest positive I've taken, that there has been some sort of acceptance of each of the sides' emergencies, or like I would say priorities. And I think there is a lot more positive news to expect in the next few months for us.
We hope so, Tushar, absolutely hope so. But going by the Commerce Minister's statements this morning in Berlin, things seem to be a little different, because he's again singling out, and I'm just reading out some more statements. We'll have more bites playing out in just a minute. He says that India looks long-term. It never takes decisions in rush or on the pressure of the moment. And he says that we don't think that we have ever decided who is our friend based on any other consideration other than national interest. If someone tells me I can't be friends with the European Union, I won't accept that. So he's going on to talk about how this Russian oil issue is a global issue. And he says that we are all in it together. The decision to buy a particular product from a country is something the entire world will have to take a call on. Why single out India? So some pretty straight talk coming in from the Commerce Minister in Germany this morning. And we'll play more sound bites from that conversation in just a bit. But Tushar, coming back to, earnings and the other side of the picture, so the India-US trade engagement is still kind of clouded, and we need to see how it resolves itself. But earnings and the first signs, say from financials at least, are fairly encouraging. Even FMCG companies are not reporting a very hot Q2, but they're all talking about a better second half. So just from an earnings growth perspective, which are the sectors or the pockets of the market where you are pinning your hopes for not just Q2, but the rest of the year?
I think pretty much the entire capital goods side, which was actually reeling from the fact that the ordering kind of, went a little bit soft. Many of the prices had gone a little ahead of the expected volume, which was to be expected from these bookings of the capital goods kind of sector. That took a bit of a breather. So I'm very, very confident that the second half is, first of all, going to be pretty significantly positive for capital goods. I also believe that financials, which have been again under a cloud for many reasons, will come roaring back for the same reason that the first 2 quarters have been a little soft in terms of the credit growth. But as we see, the 2 major imperatives that we currently have is to increase consumption and especially discretionary consumption. And the GST regulation change has come as a windfall for most of the discretionary consumption areas. And I think the banks and the financials will actually lead it because they're the ones who are actually going to finance or really bankroll, the increased consumption in the discretionary area. And then that will follow up with, the cars and obviously the discretionary goods, which will, again, I think by the end of the year, will come up with something really significant. If you are to go with any of the early polls which have been taken by some of the people around dealers, especially car dealers or even electronic goods, they're actually talking about a very, very significant upturn in terms of purchases across the board. Now, this can encompass, even things such as payments, small transactions. You can even talk about personal finance, etc. So there's going to be a pretty significant surge in terms of volume of business going forward. And I think if we just put a finger on, 2 or 3 of these sectors, I think we'll get some very significant winners along the way.
Thank you very much for joining in, Tushar. Enjoy your weekend. Always great chatting with you. Now let's talk about futures and options. Nigel brings us the latest. Nigel.
Well, the call riders have come back into play in today's trading session. 26,000 call yet again is very active in trade today. And Giving Company on the upside is at 25,900 call as well. So between both of them, the open interest build-up is massive, telling you that the call riders believe that those fresh all-time highs, we'll have to wait for a little bit longer. Just take a look at the premium. The premium has crashed on both those two by around 60 to around 70%. What's giving you some hope is that still this market is an uptrend, is that there is put writing as well that's taking place. So the 25,700 put, there's a bit of a mix of activity out there. The premium out there has moved up a little bit. From the start of today, it's moved from roughly around 40 rupees to around 46 rupees or thereabouts. So, these writers, they're expecting the lower levels to hold out. And I think this band of around 25,500, around 25,700 is extremely crucial. If this band breaks, then all eyes on the 20 DMA. But going by the options data and going by the way on our uptrend as well, this was a resistance mark. So it's important that we do protect these levels. Stocks that are in focus in today's trading session, well, Cummins, that's seen a big open interest build up out there. Massive, actually, more than 10% open interest build up. And even a market that's wobbly, that's seeing some fresh buying out there. Cipla on the flip side, the last few days, there was some delivery-based buying. And the street was sensing that there is some news that is likely to come about. It appears, the news flow that's come about is not up to expectations. So that's why the stock is down 4% and open interest as well is massive. And there are 2 stocks actually that are on the edge. They could possibly move into the F&O band. SAIL, there's a big open interest built up out there. It's on the edge out there with regard to moving to the F&O band. Maybe it has another session to move into that. But the open interest build up is there, so keep an eye out on that. And Sammaan Capital just came out of the F&O band. Well, it's seeing a surge in terms of open interest, and we had mentioned it as one of the stocks of the day since it came out of the F&O ban after a while. But that could potentially be trying to sneak its way back into the F&O ban. So I think maybe one more session or maybe today as well. Both these 2 stocks, SAIL as well as Sammaan Capital, on the verge of moving into the F&O ban. Back to you, girls.
Okay, all right, got that. Nigel, thanks very much for that. Before we move on and talk about more stocks and sectors, let's now play out some of those sound bites that I was referring to earlier. This is Commerce Minister Piyush Goyal speaking in Germany earlier this morning, talking about the way India engages with global powers and the negotiations and conversations that have been ongoing with the US on the India-US trade deal.
We are talking to the United States, of course, but we don't do deals in a hurry, and we don't do deals with deadlines or with a gun on our head. India looks long-term. India never takes decisions in a rush or on the pressure of the moment. And we've accepted if there's a tariff on us, there is a tariff on us. We're looking how to overcome that. We're looking at newer markets. We're looking at a stronger demand impetus within the Indian economy. So we have a very resilient structure. Somebody tells me tomorrow I can't be friends with the European Union, I won't accept that. Or somebody tells me tomorrow I can't work with Kenya, it's not acceptable to me. So I think we are all in it together. The decision whether to buy a particular product from a country is something that the entire world will have to take a call on. So I was reading in today's paper, Germany is asking for exemption from US sanctions on oil. Now these are UK already has sorted and probably got an exemption for procuring oil
No.
from the US.
This is about the Rosneft deal, sanctions, right. I think, and we've sorted out the issues with Germany. We managed to do that very quickly, and I think the Americans will do something very similar.
So then why single out India?
Well, it's a specific subsidiary in relation to Rosneft.
We also have a subsidiary in India of the Rosneft.
Well, come and talk to us.
Fiery. That's the Indian Commerce Minister, and he is not really beating around the bush at all. Very, very straightforward statements coming in over there that why is India being singled out when other countries, including those from the European Union and even the UK, are seeking out their own carve-outs from those US sanctions against some of the Russian entities there. So a very, very interesting conversation there. And what it tells us right now, till we know more, is that at least the Indian side, purely going by the body language and the statements from the Commerce Minister, the Indian side doesn't seem to be in any hurry or in any rush to quickly back down and subscribe to the American view that we need to stop buying Russian oil. So this is contrary to what Mr. Trump said in the White House, describing his phone call with the Prime Minister.
But the barometer, of this US trade deal, Gokul Das is still moving up. In the last 2 hours, the market has moved closer to the low point of the day and recovered. Gokul Das is saying there is a deal somewhere in the offing. The stock actually has moved to the high point of the day. Just take a look at that. It's actually moving higher, as the street doubts whether or not there is something come about.
Yeah.
That's in a world of its own. And the street, I think they're positioning that at some point of time that's going to come about. So,
Yeah, but I think a word of caution here is really warranted because, those who are obviously, use your own judgment and, your own intelligence on this, because if you just go by whatever the parlays are, we've seen this in the past, that the market jumps to imagine that the trade deal is happening tomorrow, and April to now we are towards the end of October and still counting. So let's say it's been a long wait. But anyway, on that note, let's quickly go across to Nimesh with all the D Street chatter. Nimesh, it was a truncated week, but a hectic one, right? From Diwali to then all these banking deals and now this whole India-US trade deal. Never a dull moment. What have you picked up today?
Oh, absolutely, never a dull moment. And for the last 2 days, you've been under a bit of pressure as well. I guess a couple of reasons for it. One, of course, for today, it's a Friday factor which is playing out. But barring that, the FIs have turned net sellers again. So even in today's market, my sense is that the FI number will be on the negative side. We saw that in yesterday's number as well. That's one reason. The other reason is, the big cushion of FIs being aggressively short is not anymore now. For the last few series, the FI net positioning was 90% or more. Now it's come back to almost 75%. So clearly, the short covering rally is played out. Now for the rally to play out, there has to be genuine buying, and that's missing from the larger FI's point of view, even in today's markets. So that's a short summary of the markets under pressure for the last couple of days. My sense is that now from here on, you might see a bit of outperformance in the broader markets because the big short covering rally in the Nifty is played out. Now there could be a catch-up in the broader markets, and it's slightly showing up in today's market as well. Private bank stands out. While some of the large private banks are under pressure, post this another round of PE deal in Federal Bank, most of the smaller private banks are well bid by larger institutions. So that's clearly a sector to watch going forward, and it's backed by FI buying as well. So as I said, under pressure because of FI selling, but I guess now from here on, need to watch out for a bit of outperformance in the broader markets.
Okay, and what about stocks? What have you picked up, Nimesh?
So the first name is Thyrocare. We flashed the news about the promoter selling out 10% stake. In terms of buyer, I understand some large domestic mutual funds were anchor investors in today's block deal. So it will reflect in the DI data, and of course the disclosures will come on the some large domestic mutual funds that participated in the Thyrocare block. The second name is a couple of stocks which is selling today, Kotak Mahindra Bank and L&T Technologies. While Kotak Mahindra Bank off late is a relatively outperformed, my sense is some bit of profit booking and a bit of churn within the banking sector as well. And remember, the Kotak results are also around the corner, so a bit of profit booking there. IndusInd Bank on the other side stands out in terms of a very small buying interest, but looks like some bit of institutional interest has picked up again. And today, I understand there are limit buy orders in IndusInd Bank. And the last one is Equitas Small Finance Bank. Again, a bit of bounce back in that stock as well. But for Equitas, I understand there was a selling pressure from a leading AIF that seems to be largely over, and hence you're seeing a bit of pullback in that stock as well.
Thank you very much for that. Get into break. More on markets and technical trading ideas coming up on the other side.
One, 2, 5, 6.
Welcome back. Actually, there's a bit of a recovery from the lows of the day. So we went closer to around the 25,700 odd mark. And in the last few minutes, there's been some kind of a fight back. So that's heartening actually to see. JSW Steel was a stock that was trading in the red, I recall. That's gradually moved into the green. So good to see some bit of a fight back there. And Tata Motors as well, the listed entity, that's seen a bit of an uptake in the last few minutes. So select stocks are doing a thing of their own. ICICI Bank for one, actually that's one of the swing factors because week to date, ICICI Bank was one of the stocks that, in fact, was an underperformer. But in the last few minutes, that's done a bit of a U-turn. And it's a larger weight, so it helps the Nifty. It helps the Nifty Bank as well. Midesh Thakkar from Bonanza Portfolio joins us on the show. Midesh, before we get into the weekend, what's your take on the Nifty? You've got a bit of an intraday bounce. What are the goalposts for the Nifty? And fill us in with two fresh trades.
So, I think, very clearly, this is not a bearish market, but there's a market which is overbought and giving pullback. Now, we tried to figure out the levels. The first level was around 25,800, and I think we might get a closing just around that level. And the second was 25,600. I would be a buyer on declines, but let me see, if there's a chance of reversal from these levels, 25,800. If not, then patiently wait for 25,600, 620 zones to be tested. I think, that's where some kind of buying might emerge. On the stock side, Hindalco is something, which has been strong for the day, looks very good as of yet. No signs of weakness, though slightly overbought. But BTST trade with a tight stop can be taken. Keep a stop at about 818, look for a 835 kind of a target. And the other one which I like is Hindustan Zinc, which is given a correction is trying to bounce back. So a BTST here with the stop at 482 for targets of 493.
Okay. All right, Mitesh, thanks very much for all the trading advice today and through the week. You go ahead and enjoy your weekend, and we'll connect with you again on Monday morning. For the time being, let's put the spotlight on the FMCG names. They've been under pressure actually right from yesterday. And today, Lever in particular fell quite a bit. It's been down 3.5%. And the reaction on Colgate has also been muted after what has been a lackluster quarter. Manglam's joining in with more analysis and thoughts on this. Manglam?
Well, for Colgate, it was a weak quarter that the street was anticipating. The company reported just that, a weak quarter. If you look at their numbers, 6% decline in their revenue, 6% decline in their EBITDA, net profit also declining by about 17%. Though the stock has been limited in its decline after that 40% fall for the very same reason that it had already been underperforming, was down about 40% from the peak, trading at around 39 times as against the other FMCG stocks which were trading at 45, 50, some even 60 times. So as a result of which the decline has been limited. And going forward, how the company, navigates through grammage increase after the GST transition is something that the street will be eyeing very, very closely, largely because 95% of its products now are in the 5% GST bracket as against 18%. But these numbers, they were nothing really to write home about. If you look at the company's commentary as well, they said that the performance was obviously impacted by transitory challenges because of the GST 2.0, but 3 points that they made, they've been making for the last many quarters. One, that there has been difficult operating environment and they expect gradual recovery in performance. And this implies some market share loss as well, because in the same way, and if you look at Dabur's quarterly update, their oral care business has grown in double digits. HUL as well saw only a marginal decline. In fact, some of their key products, Close Up, actually saw low single-digit growth. So all of this means that there has been market share loss for Colgate, and that's exactly what brokerages are writing as well. ICICI Securities, for instance, is a seller. They're saying that a category leader that continues to lose momentum with both innovation and premiumization failing to drive excitement in the category. And we've had Nomura as well, which said that volume decline of 8.5% was a lot lower than what they were anticipating. However, Jefferies says that premium portfolio, which is doing well, could continue to do well for them, and they are just a couple of quarters away from volume recovery, largely on account of the GST cut. So that's the sum and substance of Colgate. On Lever in particular, the numbers were largely in line. The company had said that they are looking at volume growth going forward, and there was some transition related disruption that took place, and they will expect sort of recovery coming by only in November. A few things that stood out: their margin guidance was up from 22 to 23% to 23 to 24%, and the management said that they will be focusing on volume-led growth from here on itself. The street perhaps has taken that as a pause for breath, because maybe the third quarter will not see as much volume growth. Recovery starts only in November. So let's see whether recovery starts in March quarter or not. And from then on, volume will be the key metric that everyone will be tracking, because Priya Nair has spelled that out clearly, that she is obsessed with volume growth. So a pause for breath before execution takes over.
Thank you very much for that. And the big one to watch tomorrow will be Kotak Mahindra Bank. Gaurav now joins in with what the street expects.
Well, yes, when we look at Kotak Mahindra Bank, let's see what do we know so far. Loan book growth is at around 16% and deposit growth is at around 15%. Now, when we look at these numbers, these are actually great numbers. In fact, if we compare it with the private sector banks who have reported numbers so far, these are the highest that they have been reported so far. But let's understand what happened in the last quarter. We saw last quarter net interest margins decline almost by 30 basis points, while credit costs that inched up almost by 30 basis points as well. And this was because of the stress in MFI as well as retail CV segment. And at the same time, net interest margins also declined because of the repo rate cut stress that we saw. Apart from that, now when we go ahead in second quarter, the street is expecting around 4% growth in terms of net interest income. They're expecting net interest margins to decline just by 9 basis points, and the reason being that we have already seen a big fall in first quarter. When we talk about the PPOP, which is pre-provisional operating profit, we may see an increase of around 5% on a year-on-year basis. We may see some kind of support coming up from the other income, and at the same time, when it comes to provisions and credit costs, now they're expecting 20 basis point of fall on a sequential basis in terms of credit cost. Now, when we look at the credit cost, the reported number could come anywhere between 0.7%, and as a result, when it comes to profit, we may see a flattish number. In fact, they're expecting around 2% decline on a year-on-year basis in terms of profit. But going ahead, what is important is that how the commentary is going to be on the asset quality, specifically on the MFI side, because as highlighted earlier in first quarter, MFI stress was peaked out in last quarter. So let's see if they are giving any kind of commentary on that front, as well as retail CV. Second is that the commentary of net interest margins. Is this the bottom of net interest margins, and will they expand from here on? And third is the commentary on growth. Remember, they always wanted unsecured book to grow somewhere in the range of 15%. So let's see how they are forecasting growth for Kotak Mahindra Bank. But as of now, we're expecting flattish numbers in terms of profit from the bank in this quarter.
Okay, all right. Thanks a lot for that, Gaurav. By the way, guys, before we slip into that short break, just want to focus on one stock, Jaiswal Nico. I recall, explaining to viewers what are the triggers in store at around 40-45 rupees or thereabouts, and there was a large ARC that had around 25% stake in the company. That got gradually absorbed. Now the numbers have started looking up. The EBITDA numbers moving up, cash flows are improving, and the interest costs are declining. The stock actually has been at circuit with close to around 5 lakh shares on BSE pending to buy. So the results came last week. I don't know whether that's a fresh trigger out there, but there are pending 5 lakh shares on the buy side on the BSE itself. So Street is reading something maybe the way ahead now, given that the refinancing will take place on the loans that are outstanding, and there is some debt repayment as well. So that's a stock. Just thought we'll spot.
Okay, Jaiswal Nico, interesting moves out there. By the way, as we take this break, just a moment to step back and remember someone who has played such an important part in taking the brands that we talk about, the companies that we talk about, taking those brands to households, to the consumer. Piyush Pandey, the Indian advertising world has lost its tallest light today. Piyush was 70 years old, and he will remarkably be remembered as the man who perhaps gave Indian advertising its voice on the global scale. Innumerable campaigns, including some for some of the biggest companies of India, whether it's Asian Paints, whether it's Cadbury's, whether it's, of course, many others, Lever, etc., several political campaigns as well. Piyush will always be remembered, and he'll continue to inspire generations of creative minds ahead in the advertising world as well. He leaves a big, big void, but his memory will always stay on.
Are trying to communicate something, I better engage you. If I don't engage you, then I'm talking to a wall. And I try to engage people. I respect the receiver. Something that I get moisturized every time I see it. हर घर चुपचाप से कहता है कि कोई आजाद देशवासी यहीं पे रहता है. It's written from here. So I think these are things that one would remember always.
Welcome back. Just counting down to trade, and it looks like the Nifty is going to end around the 25,800 mark. Sudeep Bandopadhyay is now joining in. Sudeep, time just for a quick question. But HUL and Colgate, these two stocks go home with deep cuts. How are you all approaching it?
I think, the challenge with these stocks, particularly HUL, is the valuation. I don't see too much of a problem as far as the performance is concerned. The commentary also has been robust. They're talking about margins going up. And of course, with the ice cream business going out, 50-60 bips will be added to the margin from next quarter onwards. But at a valuation multiple of, 50 multiple of FY27 earnings, I think the margin of error is limited. So that's pretty much why we are seeing the correction. As far as Colgate is concerned, I think the market doesn't like the volume loss which they are suffering on a month-to-month basis. They need to do something about kind of protecting the market share, or rather gaining market share. And I think that's what market would like to look forward in Colgate's earnings. Let's wait and watch. I think the last quarter was a bit of a challenge. Also, the GST transition led to some confusion in the supply chain. So I would rather wait for their Q3 numbers and take a call then.
Okay, we'll have to leave the conversation here. Wrapping up this Friday and the week. The sensex has declined close to about 320 points. The bell has gone. The Nifty ends very close to 25,800 with a fall of 94 points. Not quite at the day's low, but if you compare it to yesterday's high of 26,100, we've lost nearly 400 points on the index. Mid-cap index, small-cap index ending in the red. The advanced decline ratio stands at 2 stocks declining for 3 in the red. What put pressure is the cuts seen in FMCG names, so HUL and Colgate, and the Nifty FMCG index ending down about 3/4 of a percentage point. Banks weakened trade despite the slew of announcements. The banking index lower by 350 points, and IT came in for some amount of profit booking after yesterday's big gains. On the way up, you had strength in individual names like Bharti Airtel, but the sector of the day was undoubtedly metals. The metal index up nearly 1%. So to conclude the trading action, 1, we did see some amount of profit booking, and 2, the uncertainty regarding India and US trade deal being struck still lingers on. There is no clarity in the statements coming in from Piyush Goyal that India does not strike deals with a gun to its head, or with respect to, if there is a deadline. I think that has dashed any hopes of an impending resolution to the, trade tariffs and the tensions. And I think that was one of the triggers for markets seeing some amount of profit booking. For the week, we're up close to about 0.5% on the indices. For the month so far, it's a good run of nearly 5%. We'll take your leave. Thank you very much for watching Closing Bell. Don't go anywhere. On the other side is a special offering, Editors Roundtable.